Big news in the finance and crypto world. SWIFT, the backbone of global interbank payments, is announcing it will add a blockchain based shared ledger to its infrastructure. They're working with ConsenSys to prototype it. This could mark a turning point in how money moves across borders. Let's walk through what we know so far, how its integration with Chainlink is playing a role, and why banks are getting involved, what the risks are, what it might mean for the future and for you. So SWIFT officially announced that it is designing a shared digital ledger to complement its existing messaging and payment rails. This ledger is meant to support real-time, always-on cross-border payments, no matter the time zone. They've got more than 30 major financial institutions working with them, including big names like Bank of America, Citi, Santander, HSBC, and others across multiple countries. The plan is for this ledger to record, sequence, and validate transactions via smart contracts, adding programmable rules into cross-border payments while keeping compliance intact. SWIFT frames this as a dual-track innovation, improving their existing systems in parallel while building this future rail for tokenized value. One big question was, which chain will SWIFT build on? In recent announcements, ConsenSys CEO Joe Lubin confirmed that SWIFT will leverage Linea, their Ethereum Layer 2 solution. Linea is built as a ZK EVM rollup, combining Ethereum compatibility with greater throughput and lower gas cost. So in effect, SWIFT's ledger may run on Linea, meaning this new payment infrastructure is tightly coupled with Ethereum's security and tooling. ConsenSys' own blog states that they are supporting SWIFT in early stages of prototyping, helping define the protocol's choices so that the system can scale reliably and securely. This alignment between SWIFT's global banking reach and Ethereum's programmable infrastructure is exactly the kind of convergence many in crypto have been anticipating, but few expected it so fast. Another piece now falling into place is Chainlink. They've integrated their Chainlink runtime environment with the SWIFT messaging system. So what does that mean? It allows banks using their existing SWIFT rails to trigger on-chain transactions without rebuilding everything. In simpler terms, legacy messaging and blockchain can interoperate. This builds on prior pilots such as Project Guardian, a collaboration that included the Monetary Authority of Singapore, UBS Tokenized, and Chainlink, showing how fund subscriptions and redemptions can be managed through traditional systems into blockchain workflows. Using standard messaging like ISO 20022, banks can now embed tokenized fund operations within the same messages they've already used daily. This could drastically reduce the friction. In short, Chainlink bridges the last mile, connecting traditional finance to smart contract rails without throwing out everything that already works. So why is SWIFT doing this now? Because the pressure is real. The stablecoins and tokenization industry is growing fast, and legacy rails are slow and expensive. They're opaque too. Stablecoins like USDC and USDT have shown that they can move globally with speed and low cost. This threatens traditional systems like SWIFT, which sometimes takes days to route, as you may know if you want to send a wire to somebody else internationally or even domestically. By building a ledger that supports tokenized payments, SWIFT can maintain relevance in future where cash, stablecoins, and tokenized assets all coexist. Also, banks want control, compliance, and trust. SWIFT already has that trust. If the upgrade is done well, they preserve their role while evolving into a platform for digital value. Of course, nobody's blindly and accepting this. Some voices in the industry are pushing back. For example, Fireblock CTO criticized SWIFT's plan, calling it experimental and suggesting that they build a blockchain is not the same as building something that actually moves money in the modern market. He pointed out that Swift has been experimenting with blockchain since 2018, but that doesn't guarantee execution now. It's easy to build a prototype, it's harder to scale that globally. Also, roadmap clarity is lacking. The prototype is just phase one. Many details like token standards, asset support, interoperability rules, governance, regulatory compliance, and privacy are still open questions. And relying on ConsenSys, Ethereum, or Layer 2s introduces dependencies and tech risks. If the chain has issues, it could ripple into Swift's financial credibility. If this does work, the possibility is huge. Imagine truly instantly settling payments across borders for retail, for corporate payments, and this running 24/7. That's Swift's promise. Programmability means that you can embed conditions, compliance, approvals, currency, conversions, stablecoin transfers, all in a single transaction. This is another big win. The Swift ledger. It's designed to work with other blockchains and legacy systems. So you could send tokenized value to Ethereum, Solana, or other rails. Finally, as banks adopt tokenized assets, bonds, tokenized deposits, tokenized equities, this ledger could become the hub for value flows globally. So here's what I think. I think this is a huge foundational move. Swift is leveraging its trust, its reach, and network to stay relevant in the digital future. They're not just chasing hype. They're trying to build the rails while preserving their brand and relationships. Of course, this won't be smooth. There will be delays. There's regulatory tensions, scaling issues, and other. But it is a statement. TradFi is not ignoring blockchain anymore. So what to watch next? How the prototype performs and when Swift transaction to pilot comes into fruition. Which assets are going to be supported, which stablecoins, how deposits are going to work, how regulation responds, especially around tokenized value and banking rules. Whether Swift opens governance or retains full control, how banks outside the pilot group respond or join. So what do you think? Will this be the moment banks finally went on chain or another ambitious experiment that's too late? Let me know in the comments below. I always read them. And if you want an exchange with no KYC and no VPN and global access, check out BitUnex Exchange. Using my link in the description below will help support this channel so I can keep diving into these big stories with you. Thanks for tuning into this one, and I'll see you on the next one. Cheers.